Something big's going on, guys. Bitcoin, the US government, and this isn't about Bitcoin just going to 225K. It is about whether the United States is structurally transitioning from being a passive holder of seized digital assets to an active sovereign accumulator. In other words, the US might start buying Bitcoin actively, and that is huge news, right? So most headlines collapse that distinction, right? Institutions don't. What matters here isn't the coin. It's the funding mechanism. It's the legal authority. And whether the government is actually prepared to behave like a strategic buyer of Bitcoin, not simply a custodian of seized assets. So here's the facts. In March 2025, President Trump signed an executive order formally establishing a United States strategic Bitcoin reserve. That's old news. We know that. It's real. But as of February 2026, the reserve holds approximately 328,000 Bitcoin, almost entirely from seized assets, from criminal cases, Bitfinex, Silk Road related forfeitures, those types of things. And those coins have been pledged to not be sold. That's not accumulation. That is inventory preservation. And here's why it matters. Because the current wave of speculation isn't coming from an executive order, right? We're talking about the speculation of the United States starting to buy Bitcoin, right? It's coming from recent comments by Cathie Wood. And we know Cathie Wood, right? Everybody knows Cathie Wood, one of the most kind of forward-thinking, innovative digital ETF managers out there, the ARK funds, right? ARKK, ARKF, all of those. She argued publicly that if the administration intends to reach its stated goal of 1 million Bitcoin, it cannot simply rely on forfeitures. It would need to start purchasing Bitcoin on the open market. And if that happens, guys, the US Treasury doesn't just become a holder. It becomes the buyer of last resort. And there's one structural constraint that decides whether this scenario is possible, but we'll get to that shortly. Before that, though, there's a second development being treated as a parallel mega catalyst. On February 13th, 2026, Trump Media and Technology Group, ticker DJT, we know that, filed updated proposals with the SEC to launch multiple crypto-related ETFs. These are branded as the Truth Social Funds. Nice. And the lineup includes a spot Bitcoin and Ethereum ETF with staking rewards, a product called the Truth Social Kronos Yield Market Maximizer ETF, tracking Crypto.com's native token CRO. Trump Media is partnering with Crypto.com and Yorkville America Equities. The SEC delayed earlier filings last August. The February 2026 revisions are being interpreted as a higher priority push for approval this quarter. Again, the structure of this matters more than the brand, because it's not just another issuer filing a crypto ETF. It is a politically aligned media company attempting to vertically integrate distribution, narrative, and asset exposure under one single umbrella. And this changes incentive alignment, but it doesn't change the regulatory math, because if we zoom out, two narratives are circulating, right? One, the US is going to buy its way to 1 million Bitcoin, triggering a sovereign supply shock. And number two, politically aligned ETFs will accelerate retail and institutional flows simultaneously. Both narratives feed into a third claim, the $225,000 price target, because that number is being cited by several Wall Street firms, right? And it's been circulated recently on CNBC as a bull case scenario. The model behind it assumes the Genius Act, which is the legislation formalizing and expanding the reserve, passes Congress. Under that framework, if the US purchases roughly 200,000 Bitcoin per year, analysts argue global scarcity dynamics could push the price into the $150,000 to $225,000 range within 12 to 18 months. And now we get to the constraint. The executive order directing the reserve includes a budget neutral requirement. That means the Treasury cannot simply appropriate new deficit spending to buy Bitcoin. It must either reallocate existing funds, use asset swaps, or rely on additional forfeitures. And until a formal funding bill clears the House and Senate, the reserve is structurally limited to what it finds, not what it buys. And that single detail determines whether the 225K thesis is a model or a mechanism. So let's break this down into a couple different layers. First, immediate institutional impact. The existence of a formal reserve, even if it holds only seized assets, changes custody expectations globally. Other sovereign nations now have political cover to classify Bitcoin as a strategic reserve asset rather than a speculative holding. But without active purchasing, there's no incremental demand shock. Symbolism alone is not going to absorb the supply. And second, regulatory consequences. If the Trump media ETFs are approved with staking features, that signals the SEC is willing to allow yield-bearing structures inside regulated wrappers. And that would be more meaningful precedent than the branding itself. So the question is not whether these ETFs launch. It's whether they're approved with staking mechanics intact. That determines how aggressively U.S. capital markets can package on-chain yield into traditional products. And third, let's do some scarcity math. There are roughly 19.6 million Bitcoin that have been mined. Daily liquid float is dramatically smaller. If the U.S. were to purchase 200,000 a year, that represents 500 a day. Consistent sovereign demand. That's the supply shock model analysts are referencing. But without congressional funding authority, that demand cannot legally exist at scale. So what are we actually watching here? Not price, not hype. We're watching whether Congress converts an executive order into appropriated accumulation program. If funding passes, Bitcoin transitions from a seized asset to strategic allocation. If it doesn't, the reserve remains symbolic inventory. And symbolism doesn't compress the float. As for Trump media's ETFs, approval would confirm that politically affiliated issuers can move through the SEC pipeline in the post-2024 ETF environment. Rejection or further delay would signal the opposite, that branding does not override regulatory caution. So here's the clear framing. The market's pricing headlines as inevitables. Institutions are pricing mechanisms. And right now, the mechanism for sovereign buying is incomplete. The mechanism for staking-enabled ETFs, unproven. The $225,000 figure is not a forecast. It's a conditional outcome dependent on the legislative execution. So what do we watch next? Here's what we watch for, guys. Movement on the Genius Act. Can they get the damn thing passed? Budget language tied to reserve expansion. Are they going to let the U.S. start buying Bitcoin instead of just holding seized assets? SEC commentary on staking within ETF structures, and whether Treasury officials begin discussing acquisition methods beyond forfeiture. This story isn't about whether Bitcoin rallies. It's about whether the United States transitions from a passive holder to a structural accumulator. And until that switch flips, this remains a policy signal, not supply shock. And markets price supply shocks very differently than press conferences. Guys, this is Luke with Ledger Prime. We'll see you in the next one.